Hey there, I'm Apple Crider from Investing Simple. In today's comparison, we're breaking down the two popular investing apps, Betterment versus SoFi. We're going to be breaking down the core features of each platform, what sets them apart from each other, and which one is going to make the most sense for you. So let's dive right on into it. Now, while these features are pretty standard at this point, it is important to note that neither of these platforms are going to charge you any commissions for trading, nor are there going to be any minimums to get started on either Betterment or SoFi. So if you're a complete beginner, you got $5 to your name, you can get started on either of these platforms today. Now, first off, let's dive into Betterment. So Betterment in general is a robo-advisor and one of the largest robo-advisors out there at the moment. And what a robo-advisor is that essentially takes your traditional online brokerage where you can buy stocks in individual companies and ETFs and whatnot, and it takes your financial planner, working with a financial advisor, financial planner, combining those two things together in like this middle space is the world of robo-advisors. So essentially how they work is they ask you a couple questions about your goals, your financial situation, your time horizon, your risk tolerance, all that stuff. And then based on how you respond to those questions, they're going to build you a portfolio that best matches your basic goals and risk tolerance, etc. So you're getting a lot of the perks of actually working with someone to help you design this portfolio. You don't have to know everything yourself. And then you're also getting a little bit more flexibility and freedom to edit this thing as you want and pay much lower fees than you would by working with a traditional financial planner. Now, one thing that this means, though, is that you're not buying individual stocks. So if you're looking to buy individual stocks, Betterment is not the platform for you. There are going to be stocks in your portfolio, most likely, but you are not going to be going out there and saying, okay, Betterment, I want to buy one share of Apple, I want to buy one share of Google, one share of Facebook. That's not how the platform works. You answer the questions, they build your portfolio, and then you invest into that portfolio over time. And as your time horizon changes, as your goals change, that portfolio is going to change as well. And one thing that's really important to note about Betterment is that it's a goals-based platform. So you're not just going to have one portfolio. You're going to have different sub-accounts for your different goals. So for example, say you want to take a trip to Thailand in a year, and you want to buy a house in 5 years, and you want to retire in 20 years, and you have all these goals, okay? Well, on Betterment, what you do is you create separate little sub-accounts to work towards each of those goals, because each of those goals has a different time horizon. You want to invest for each one at a different rate. You got different kind of portfolios that you want to make for each of those. So you have different little sub-accounts for each of those, and then you can easily track your progress towards each of those goals, which I find to be a lot more motivating. When I use Betterment, it's really motivating to see like, okay, my goal to buy this house, I'm like working my way towards it. I can see that, okay, I'm 50% of the way there, I'm 60% of the way there, and I'm working towards it. And you can have all these goals kind of working towards them in tandem, which you can't really do with a traditional investment account. You know, you can watch the number go up, but it's harder to kind of visualize, okay, well, how much of this is for that and what is for that, and how do you do that? So with Betterment, you kind of are able to separate out all those goals, and it's a little bit easier to stay motivated, I find, to work towards those goals. Now, within your portfolios, there's a number of strategies that Betterment is going to apply for you and features that's going to make this platform very effective for you as a long-term investor. The first of which is automatic rebalancing. So say in one of your portfolios, it's 50% stocks and 50% bonds. Well, over time, that ratio is going to change because maybe stocks go way up in value and bonds go down, and then eventually you're left with 60% stocks and 40% bonds. Well, Betterment is going to continuously be automatically rebalancing your portfolio over time, bringing you back to that 50-50 allocation, which is going to force you actually to buy low and sell high, the time-tested advice of investors like Warren Buffett. So it's basically forcing you to follow that strategy without you having to do anything, which is very, very nice. Additionally, they're going to offer you some more advanced investing strategies that you can just apply completely passively, things like smart beta, tax loss harvesting, socially responsible investing, and a whole number of things that you would traditionally have to pay a significant amount of money to a financial planner in order to access. You're also going to be able to invest in retirement accounts if you would like to. This is going to provide you with potentially some significant tax benefits over time if you are investing for the long term. And then in addition to their investment offerings, Betterment also has high yield savings accounts and a fully online checking account that has no fees, which you can use in tandem with your Betterment investing if you would like to, completely for free. Now, like I mentioned, Betterment is not a free platform. Unfortunately, I wish it was, but because they are offering you so many additional features and benefits, it is a paid platform. So how it works is that there are two kind of tiers. Okay, you can be on their standard tier or their premium tier. If you're on their standard tier, you're paying 0.25% every single year. So say you have $100,000 with Betterment, you're gonna be paying $250 per year for that service. which in the grand scheme of things, that's about a quarter of as much as you would pay to a traditional financial advisor or financial planner to work with you one-on-one. So that's your standard tier. On your premium tier, you're gonna be paying 0.4%, so a little bit higher, but you're also gonna get access to work one-on-one with certified financial planners, which is kind of the creme de la creme of the financial planning industry. But there is gonna be a $100,000 minimum to use that service. So to be on premium, you gotta have a $100,000 minimum, but you get to work with those certified financial planners, which is very, very nice. So that's Betterment. Now let's shift gears to SoFi. In general, what you're getting with SoFi is a very holistic approach to your finances. So you're not just getting investing, but you're also getting things like banking, loans, credit cards, mortgages, all of that good stuff, all within the SoFi platform. And it's very tailored at younger or newer investors, people who don't have a ton of experience. So it's a very easy to understand interface. They keep everything very, very simple, and it's very easy to get up and running on the platform. Now on the SoFi platform, you're gonna have access to things like stocks, ETFs, cryptocurrencies like Bitcoin, as well as the option to automate your investing similar to what you're doing on Betterment. So they do have kind of like a robo-advisor option where you can choose to answer some questions, they'll build you a portfolio, or you can do the kind of DIY route where you build your own portfolio from scratch. If you do decide to build your portfolio from scratch, you're gonna have access to fractional shares, which allows you to buy stocks and ETFs in $1 increments. So instead of having to pony up over $1,000 for a share of Google, you can just invest a single dollar into Google stock, which is very nice if you're a beginner investor. You wanna get that diversification without dropping thousands of dollars. And then they've also got dividend reinvestment so that the dividends that those companies pay out can be pumped back into fractional shares if you would like to do that, or you can choose to take your dividends as cash if you would prefer to do so. Now, in addition to their investing arm, they've also got SoFi Money, which is essentially a fee-free checking account that you can use that comes with a nice debit card and the ability to take cash out of ATMs anywhere you would like without paying a fee. You're also able to get up to $150 for free just for signing up for a SoFi Money account, which is super nice, and there'll be more info on that in the description below and a link to check out that offer as well. You've also got a 2% cashback credit card that SoFi does offer that charges no annual fee. You've got student loans, you've got mortgages, you've got a ton of stuff that SoFi does offer. Like I mentioned, it's a very holistic platform where you can get pretty much all of your personal finance needs met in one place. They're kind of aiming to be that one-stop shop for younger investors and millennials specifically. And then to top it all off, you've got access to CFPs, like I mentioned before, certified financial planners at no cost whatsoever. So like I mentioned, SoFi is a free platform to use, and on that free platform, you are gonna get access to certified financial planners, which is huge. That is a really big plus that SoFi does offer, and one that should not go overlooked. And then the last thing that I wanna mention about SoFi is that they also have a free stock promotion where when you sign up, you can get potentially up to $1,000 in free stock when you use the link down below. So if you wanna support the channel and potentially earn up to $1,000 in free stock in the process, then use that link down below when you do sign up. Like I mentioned, it's totally free, so there's no risk to you. So overall, more hands-on investors and people who are looking for kind of a one-stop shop for their finances are likely going to have a better experience with SoFi. But if you're looking for that hands-off experience, a more passive investing style, then Betterment might be a better platform for you to take advantage of. But either way, both platforms are very accessible, so it does not hurt to sign up for both. Get your free stocks from SoFi, and then decide which one makes the most sense for you going forward. But if you want more information on Betterment versus SoFi, we have a fully comprehensive article that we've written over on our blog, investingsimple.com, that goes even deeper than this video was able to do. So if you want to check that out, the best way to do so is to go to Google, type in Betterment versus SoFi, and click on the link for Investing Simple. We will see you over there.